Best stocks to buy for long-term. Long-term investing is a sound strategy for generating wealth over time. Most seasoned investors would agree that being in the market for a long time is more significant than being in the market at the right time. To put it another way, if you have a long-term investment strategy and appropriately diversify your portfolio, it's almost always a good time to invest. As a result, today, I'll talk about 10 long-term stocks to buy and hold for a comfortable retirement. Welcome to Stocks Galore, the place for those in passionate pursuit of financial freedom. Smash the like button now, subscribe to our channel, and click the notification bell to be notified when new videos are released. Given the increasing volatility in the stock market, as well as the hype around attractive meme stock returns and sky-high cryptocurrency prices, it may be tempting in the coming months to go after quick profits. However, the global economy is still recovering, making it more important than ever to concentrate on long-term stocks as part of a retirement strategy. Avoiding the short-term noise that so often derail most investors is part of a successful long-term investment approach. Daily news headlines do not have to scare market participants out of the market. A longer holding period also gives investors more time to ride out any bumps in the road. Without much further ado, here are the 10 best stocks for buy and hold investors that should provide consistent and profitable returns over the next few decades. 1. Alphabet Inc., ticker symbol QOG. Google's parent business closed at $2,876,000.44 a share on October 19, 2021. Alphabet Inc. has a market valuation of $915 billion and has returned a respectable 53.60% in the last year. During the fourth quarter of 2020, hedge funds with long QOG positions grew. At the end of the third quarter, 179 hedge funds held a position in QOG, up from 162 funds at the conclusion of the previous quarter. TCI, owned by billionaire Chris Hohn and valued at $5.2 billion, is the company's largest shareholder. 2. Amazon, ticker symbol AMZN. Amazon's performance so far in 2021 has been disappointing, with shares up less than 1% year-to-date. Don't be deceived, though. The company continues to provide investors with a great blue-chip brand with solid growth potential, which is an unbeatable combination. Second quarter revenues increased by 27% year-over-year to $113 billion, owing to strong performance in Amazon's core North American e-commerce business, which accounts for 60% of total sales. This figure upsets some investors because it represents a slowdown from the 40% expansion seen during pandemic lockdowns this time last year. However, Amazon's long-term thesis remains intact as more businesses migrate data storage and operations to platforms like Amazon's AWS in order to save money and improve efficiency. Amazon is also working hard to keep its e-commerce and retail economic mode intact. According to the Wall Street Journal, Amazon aims to add full-fledged department shops to its existing network of 29 checkout-free Amazon Go locations, which may sell anything from clothing to home supplies. This technique could help Amazon compete against big-box competitors like Walmart, which presently dominates the market. Amazon is more expensive than the S&P 500 average of 34, with a price-to-earnings multiple of 4 to 5. However, given its solid growth rate and past record of market leadership in e-commerce and cloud computing, the company still appears to be a decent buy. 3. Facebook, Inc., ticker symbol FB. Facebook, Inc., founded by Mark Zuckerberg, is ranked 8th among billionaire Julian Robertson's top 5 investment recommendations. On Tuesday, October 19, 2021, the California-based corporation was among the strongest performers on the S&P 500 with a stock price of $399.99 per share. Facebook currently has a market valuation of $799 billion and has returned 33.85% over the last year. There were 242 hedge funds with interests in Facebook Inc. at the end of the fourth quarter, compared to 230 funds at the end of the third quarter. SP Management is the company's largest shareholder, owning 12 million shares worth $3.2 billion. In their Q4 2020 investor letter, Kinsman Oak Capital Partners expressed a contentious viewpoint on Facebook, claiming that it is a not-that-pricey firm. 4. Apple Inc., ticker symbol AAPL. Apple Inc. is a global company headquartered in Cupertino, California. The company designs, develops, and sells personal computers, mobile devices, tablets, integrated circuits for use in communications devices, servers workstations, cloud computing systems, digital music players. Apple was founded in 1976 by Steve Jobs and Stephen Wozniak. It went public in 1980 at a value of $1 per share. Today, Apple Inc. is the most valuable company in the world, with a market capitalization of $2.4 trillion. They have a wide range of product lines that include personal computers, laptops, tablet computers, smartphones, and smartwatches. They also provide services such as cloud computing and software development. Apple Inc. has been on a constant growth trajectory for the last decade, with its products becoming more popular among consumers across the world. Apple is a powerful company on the rise and will continue to be such in the future. Despite such high growth performance, it is currently considered a value stock, making it an attractive option for investors who are looking for an investment with long-term potential. This company has created some of the most iconic and breakthrough technologies in the world. While this technology is constantly evolving and changing, Apple's success is largely based on its people and their creativity. Apple's products are always in demand by the public due to their unique features and design. Analysts are optimistic about Apple's future as they see it as a value stock to invest in for the next 5 years, at least because of its diversified product lineup that covers both high-tech hardware and software. 5. QUALCOMM Incorporated, ticker symbol QCOM. QUALCOMM Inc. is a cellular technology company based in California. Intellectual property, semiconductors, software, and other associated services are all available through the corporation. It also creates and develops processors specifically for smartphones. QCOM announced the opening of a new 5G R&D facility in France as part of their ongoing expansion plans, with the goal of driving 5G development locally, regionally, and internationally. QCOM's revenue climbed by 62% to $8.2 billion in the first quarter of 2021. The company took advantage of the increased demand for 5G-enabled devices, which resulted in outstanding year-over-year growth. Revenue from the mobile phone chips business increased by 79% to $4.22 billion. Revenue from the radio frequency chips sector increased by 157% to $1.06 billion, and revenue from the automotive chips business increased by 44% to $212 million. Furthermore, the company's licensing sector brought in $1.66 billion in revenue, up 18% from the previous quarter. Qualcomm expects sales in the upcoming quarter to be between $7.2 billion and $8 billion, which is more than most experts had projected. Qualcomm was downgraded by CD Research on Thursday as a result of Q3 earnings. Analyst Christopher Danley downgraded QCOM from a buy to a neutral recommendation. He also reduced his price estimate for the stock from $194 to $165 per share, citing the end of the 5G upgrade cycle and the possibility of lower profits in the future. Matrix Capital Management has 3.3 million shares in Qualcomm with a $508 million investment as of the end of the fourth quarter of 2020. As of the end of the fourth quarter, 85 hedge funds owned QCOM, compared to 87 funds in the third quarter. 6. Snap, ticker symbol SNAP. Snap, the parent company of Snapchat, has outperformed many of its social media counterparts this year, up 47%. The platform's solid specialization and growth into synergistic prospects, such as augmented reality, could help it continue on its upward trajectory. Revenue increased 116% year-over-year to $982 million in the second quarter, outpacing rivals Facebook and Twitter, which climbed 56% and 74%, respectively, in the same time. Snap's economic moat is based on its emphasis on 13 to 24-year-olds, where it has a 90% penetration rate in established economies. Advertisers can target this affluent demographic via Snapchat, thereby increasing ad revenues. Snap is bolstering its advantage with augmented reality. Over 200 million of the company's 293 million daily active users, according to management, use augmented reality on a daily basis. The company also intends to use this audience to improve the online buying experience, which may involve product scanning and virtual try-ons. This type of strategy could help Snapchat increase its average revenue per user. Snap costs 33 times its sales, which isn't cheap. However, given the company's strong moat and significant AR engagement, Investors are justifiably enthusiastic about the company's ability to continue solid growth rates. Sales are expected to increase by up to 60% to $1.1 billion in the third quarter, with adjusted EBITDA of $100 million to $120 million, up from $56 million the year before. 7. Brookfield Infrastructure Partners, ticker symbol BIP. 3.64% dividend yield. Brookfield Infrastructure Partners is a master limited partnership that invests in and manages long-term infrastructure assets with predictable cash flows. It focuses on acquiring infrastructure assets with low capital costs of upkeep and substantial entry barriers. Early in August, Brookfield revealed its second quarter results. Revenue grew by 36% year-over-year to $2.7 billion. The company earned $352 million in net income, or 61 cents per diluted share, compared to a loss of $61 million, or 25 cents per diluted share, in the previous quarter. The $394 million in funds from operations represents an increase of 18% year-over-year. Cash and equivalents were $1.28 billion at the end of the quarter. Our base business delivered good profits in the second quarter, benefiting from the ongoing economic recovery. CEO Sam Pollock said of the results, "The recent conclusion of a number of big capital recycling efforts has given us with more liquidity to support our healthy pipeline of future investments." BIP is the world's largest owner of water, energy, utility, transportation, and communications infrastructure. These assets provide important services that are difficult to duplicate, as well as a consistent and recession-proof cash flow. The corporation separated its shares to form Brookfield Infrastructure for investors who prefer to avoid partnership taxes, ticker symbol BIPC. BIP shares and BIPC shares have the same economic return. BIP stock has a dividend yield of around 3.6% and is currently trading at $57. The stock appears to be undervalued, as it is currently selling at around 1.6 times trailing sales. Brookfield Infrastructure is a good long-term investment for income investors because of its investment-grade credit rating. 8. Adaptive Biotechnologies Corporation, ticker symbol ADPT. Adaptive Biotechnologies Corporation, with a market capitalization of $7.8 billion, ranks first among billionaire Julian Robertson's top 10 stock picks. The Washington-based firm is a leading proponent and manufacturer of immune-based medications that aim to improve people's lives. The company recorded sales of $30.2 million for the fourth quarter of 2020 and $98.4 million for the full year of 2020, representing a 25% and 16% growth over the corresponding periods in 2019. ADPT closed at $33.45 per share on October 19, 2021, after delivering an amazing 101.32% return over the previous 12 months. Adaptive Biotechnologies Corporation was owned by 30 hedge funds at the end of the fourth quarter, compared to 26 hedge funds at the end of the third quarter. With 29.9 million shares worth $1.7 billion, Andreas Halvorson's Viking Global is the company's largest shareholder. 9. Dominion Energy, ticker symbol D. 3.47% dividend yield. The Richmond, Virginia-based company Dominion Energy is a fully integrated energy corporation with over 30 gigawatts of electric production capacity and over 93,000 miles of transmission and distribution lines. Early in August, management released its second quarter results. Revenue fell 2% year-over-year to $3.04 billion. In the prior year quarter, net income was $285 million, or 33 cents per diluted share, compared to a net loss of $1.2 billion, or $1.52 per diluted share. Berkshire Hathaway bought Dominion's natural gas transmission and storage operations in July 2020. Dominion has become a pure-play regulated utility, generating more than 90% of its earnings from state-regulated gas and electric utilities since selling its gas business. This means a more consistent cash flow and predictable profits. Dominion now predicts annual earnings growth of 6.5% starting in 2022, up from its previous guidance of 5%. Investors saw a 33% dividend decrease last year, as the gas division contributed nearly 25% of Dominion's operational earnings. Dividend payouts are expected to climb at a rate of 6% starting next year, according to Wall Street. Dominion stock is currently trading at $72, down about 4% year-to-date and 12% year-to-date. Long-term investors will continue to find the stock appealing. D shares are currently selling at a forward earnings multiple of 17.7 times and a current sales multiple of 4.2 times. 10. Vanguard Growth Index Fund ETF, ticker symbol VUG. 0.50% dividend yield. Annual expense ratio 0.04%. The Vanguard Growth Index Fund ETF, for example, is a passively managed fund that provides broad exposure to large and mid-capitalization U.S. companies with growth characteristics. The CRSP U.S. Large Cap Growth Index is followed by VUG, which began trading in January 2004. Technology is significantly weighted 49% in the fund, followed by consumer discretionary 22.60% and industrials 12.10%. There are 286 holdings at the moment. Apple, Microsoft, Amazon, Alphabet, and Facebook are among the most well-known companies. The top 10 holdings account for over half of the $179.4 billion in net assets. The fund has returned nearly 25% so far in 2021 and is up 16.5% year-to-date. A possible drop to $285 a share would increase the safety buffer for buy and hold investors. Bonus best stocks to buy for the long term. Healthcare Trust of America, ticker symbol HTA, 3.94% dividend yield. Healthcare Trust of America, situated in Scottsdale, Arizona, is a healthcare facility real estate investment trust REIT that was created in 2006. Since then, the company has invested more than $7 billion in medical office buildings, making it the country's largest medical office REIT. In early August, Healthcare Trust of America reported its second quarter earnings. Total revenue climbed 5% to $189 million year-over-year. The company earned $38 million in net income, or 17 cents per diluted share, compared to $13.5 million, or 6 cents per diluted share, in the previous quarter. Cash and equivalents were $90 million at the end of the quarter. Buildings near hospitals, academic medical facilities, and other primary healthcare systems are frequently tracked down by the rate. Because institutions now control less than 20% of medical office buildings, the rate expects to see significant growth in the future years. HTA has access to affordable finance thanks to its investment-grade credit rating, which it is using to consolidate this fragmented market. HTA is the only REIT in its class that has increased its dividend every year for the past 7 years. It presently pays out a 4% dividend yield. However, before initiating a long position, prospective investors should wait for a drop. HTA stock is presently trading at a 52-week high of $33.64 per share, up 27.7% year-to-date. So there you have it. If you enjoyed this video, smash the like button now and subscribe to our channel to be notified when new videos are released.